Of course, we're looking at $120 billion as an unmet gap for Africa trade financing. But what can you tell us that is being done to see that we can bridge this particular gap at the particular moment?
Hi, Michael. Thanks for having me. There's number of opportunities here and how this gap can be filled, and lots of the development of financial institutions across the continent, including the likes of AfriExim and African Development Bank, have been championing the solutions here. Some of this has included, multilateral funding from lots of trading partners that trade with Africa, in the likes of China, and also, availability of close to about $4.5 billion of funding that has been mobilized. Another solution that we've seen emerging here is also the availability of non-bank funding through various trade finance funds that have been set up over the last couple of years, who are actually trying to tackle this problem. But from our perspective, the third leg of this solution is actually the role of technology in trying to address this challenge. And I think there's definitely more that can be done in terms of leveraging technology to make sure that a lot of the capital that is available is being allocated in the most efficient way to the businesses that need trade finance funding on the continent.
Lanre, let's get back to banking, of course, the traditional way, and we also understand that most of the funding is coming from the banks. But if we look at the SMEs that are rather looked at as the biggest job creators in Africa right now, we know that 88% of them have a bank account, but only 20% have a loan. What is the rate of rejection right now for SME funding, and what could be done about that?
Well, great question, Michael. I think, the rate of rejection right now is well over 60% for SMEs. And as you rightly spotted, a lot of the SMEs do have bank accounts with the various local banks, or some even with, regional banks that the bank with, but these businesses cannot raise the needed trade finance to grow their businesses. And some of the reasons that we've seen that have been reported on for this challenge has been the case of, the scale of the businesses, the fact that a lot of the businesses actually do not have, credit history, or even, company data that a lot of the lenders often require as part of their assessment to make loans available to these businesses. The third issue that we've seen that has also led to quite a lot of the gap in SMEs accessing funding is also bank regulations. So over the last couple of years, we've seen increasing regulations like the Basel III, which has definitely limited the amount of capital that banks can make available to their customers. And what the banks have tended to do is actually make more capital available to the bigger customers, the more reliable businesses, and at the detriment of the SMEs, which, as you rightly mentioned, are definitely the engine of growth across the continent.
Right. With the financing gap that we're looking at, about maybe $331 billion for small and medium enterprises in sub-Saharan Africa, about 444 million of them. Talk to me when we look at the intra-African trade that we're expecting to grow, of course, with the signing of the Africa Continental Free Trade Area that, was signed in Kigali in March last year. That's actually a year from now back. Tell me, do we see any of these bringing a solution to this particular question? Because what will be the instance of signing deals if they can't actually facilitate with trade and also business growth for our small and medium enterprises?
That's really, really important question that we've been pondering here ourselves. And you're right, whilst there's a lot of these top-down solutions like signing up the intra-African trade agreement, the availability of capital from multilateral agencies, these solutions still do not, essentially, in our view, address the real cause of the funding gap, which is the inability of trade finance to kind of get to the SMEs. So in our view, what we're recommending and what we've kind of, based on our research, observed is there needs to be a two-pronged approach here, whereby bottom-up solutions like allowing SMEs to access funding through various platforms or through non-bank lending will definitely help address some of this challenge, and also continue to support, not just from the government level, but also from the developmental finance institutions, to actually recognize that there is a need to focus or create solutions that will help SMEs access the right level of funding and grow their businesses. The other point I think is also relevant to make here is also the intra-Africa trade.
Right.
Right. Whilst a lot of the transactions or businesses that we see actually are, exporting out of the continent, very little is being done with regards to improving the intra-Africa trade. And this is for, legacy reasons, which has always included things like access to infrastructure or the ability to move goods and services across the continent. So there is definitely a role for government and the large institutions to address this gap.
Right. Just let's come back to the conversation with technology there. I know you mentioned that one of the biggest constraints also coming back to the financement is that there is no credit reporting for these SMEs. We don't have enough information to base the conversation, rather the decisions on for the financiers. But also, that is something that Benedict Orama, the president there for the Afrexim Bank, mentioned that traders don't have information on the trade routes or even that to financiers as well. But talk to me more on technology, AI, machine learning, blockchain. We're seeing a drive and uptick on that particular beat. How does that now come into channel or to bridge the gap for the financier, but also those that are actually demanding for the money?
Yeah, that's right. I mean, Afrexim have actually put their foot forward on this, and also, are investing in platforms which are, for example, the Mansar solution which they put forward, which is essentially a data repository for SMEs, and providing data or access to company information to potential investors. That, in our view, it's a good step in the right direction, but there is more that needs to be done. All well and good to have data about the various companies, but also how do investors reach these companies? How do they vet the companies? So yeah, you're right. There's definitely a role for technology in that. So platforms that have access to data, blockchain technology for document exchange. I think we saw recently, late last year, a transaction that was carried out between a number of banks, where a deal that would typically take 15 days to close was done in 24 hours because of the ability to exchange documents, verify these documents, issue payments, and release goods within 24 hours. So yeah, definitely, I think there is a role for technology to continue to address some of these gaps within the trade finance sector in Africa.
Right. Lara, thank you very much for joining CNBC this afternoon to touch base with that particular conversation.
Thank you.
All right.